Yes, good morning. Yeah, we are very happy with the set of results published today. So the Fragrance and Beauty division, which represents about half of Givaudan, grew 7.6%. And really on the back of fine fragrance, the prestige perfumes and mass prestige, perfumes around the world, which again are growing 14% this year. So a good testimony to beauty.
I've just been looking at one of the analysts who's been very quick off the mark looking at your numbers, saying taste and well-being miss. Underwhelming second half adjusted EBITDA is what they're saying there as well. Adjusted margins up, but not as high as they would have hoped as well. So do you want to tell us if there's any specific areas in taste and well-being that you have concerns about? I noticed Asia Pacific, like-for-likes were down.
Well, that's not, a reflection that we have on our results. If we look at actually the taste and well-being, it's the division which has been growing 1.1%. So for sure, volumes have been down, compensated by price increase. But, the EBITDA, the comparable EBITDA margin has been sustained at 20.3%, which is a high number if you look at it from an industry-wide standpoint. So the volumes decline have been very much driven by what we have seen with most of our clients, which are all about destocking, about what we call shrinkflation, as well as some slowdown in consumption in certain parts of the world, such as Asia or obviously North America. But we are confident in the business going forward that it recovers some volume growth and an improved EBITDA margin.
Yeah, for sure. Do you just want to dig into that Asia-Pacific region a little bit? Down in the fourth quarter, 4% on a like-for-like basis, decelerating versus the third quarter as well. Is there a specific problem in Asia? And I guess I'm pointing to questions about China once again.
Well, China overall for the group, we are actually growing almost 5% on a like-for-like basis. So given the sort of economic conditions, this is a good number. The slow pace of Asia Pacific has been very much driven more by Southeast Asia, which is a combination, obviously, of all those markets around Thailand, Vietnam, Philippines, and Indonesia. And that's really across the board. So we can say that the recovery in Asia is yet to come. It's a high-growth market for us, a high-growth region for us, which has always been growing close to double-digit, but we are confident it will come back.
Gilles, good morning to you then. Just your input costs. I mean, you've spoken about volumes then going lower, but you have also had input costs going a little bit higher too. Are you going to continue to pass that on, or are you looking to reduce those input costs right now?
Yes, so the input cost has been very much growing, especially in 22, and then a continuous growth of about 5% in 23. But we have fully compensated those input costs, and I would actually add also energy costs, obviously. So those were fully compensated with price increase that we have seen in 23 as much as 22. So we see a sort of a mild development of input costs in 2024, coming more to a pause. Naturals a bit up, synthetics less. So going forward, we don't see a material price increase in 24.
But